For years, Rolex watches have transcended mere timepieces. They've become coveted symbols of status, investment opportunities, and even speculative assets. Fueled by limited supply, brand prestige, and a thriving luxury market, prices for certain models soared, giving rise to what many called the Rolex bubble. But has this bubble finally burst, or is it just taking a breather? Whether the surge in Rolex prices has truly halted remains uncertain. While some indicators like softening pre-owned prices and increased availability from dealers suggest a slowdown, the brand's enduring allure and production constraints may provide support. Economic challenges could further impact the market, but Rolex's strong reputation and controlled supply chain might prove resilient. The future of this market is uncertain, requiring ongoing monitoring to determine if the bubble has indeed burst or simply deflated. In today's video, we're not just discussing the deflation of Rolex's inflated bubble, we're also delving into the current state of the watch market and its values. So buckle up, watch enthusiasts and financial observers alike, as we explore the fascinating realm of Rolex price dynamics. We'll examine the signs, from cooling resale markets to economic challenges, while acknowledging Rolex's enduring brand strength and unique market position. If you haven't subscribed to our channel yet, we highly recommend doing so now to stay informed about our upcoming video releases. The term bubble has been applied to the Rolex brand due to its forward-thinking and trailblazing reputation. Rolex continuously pushes boundaries and enhances its products, showcasing remarkable self-reliance as a company. They oversee every aspect from design and assembly to material sourcing and smelting in-house. Today, our goal is to offer a comprehensive overview of the current watch market landscape. Recent news releases shed light not only on the secondary market, but also on the sales of new watches, which we find both intriguing and worrisome. Stick with us until the end of this video, as we believe it prompts several thought-provoking questions. Leveraging watch charts as a reference, let's dive into the data. According to the data, the secondary market has witnessed a significant decrease of just under 8% in the last 6 months and a staggering 12% drop over the past year. While these statistics may be startling, they're not entirely unexpected, given the prevailing economic conditions. Furthermore, when we examine specific brands, we notice significant declines in values. For instance, Rolex values have declined by 6% in 6 months, while Patek Philippe's have decreased by approximately 8.4% over the same period. A closer look at Rolex models reveals surprising findings. The highly coveted Daytona in gold has experienced a drastic 99.4% decrease in value, contrary to expectations of retaining its worth. Even more astonishing is the substantial depreciation of the Sprite, a once hyped GMT Master 2 losing almost 15% of its market value in just 6 months. Similarly, Audemars Piguet models have also been affected, with the Royal Oak Moon Phase 26574 plummeting by 17.1% and the Rose Gold Chronograph 2641 dropping by 13.3% during the same period. These trends highlight the volatility and unpredictability within the watch market, raising concerns for enthusiasts and investors alike. Another notable aspect concerning the secondary market is the significant 19% decrease in sales revenue over the financial year ending March 2023. This decline, though substantial, becomes even more intriguing when considering the current state of the market. Recent data from watch charts indicates an average drop of 8.6% in the last 6 months alone, prompting speculation about the potential impact on the latest financial reports. Moving beyond the secondary market, the sales of new watches also present intriguing developments. There's a notable increase in the availability of previously elusive timepieces. For instance, Rolex watches once hard to come by are now more readily accessible in many authorized dealerships. While not every model may be readily available, the scarcity signs proclaiming for exhibition only are becoming less common. Pierce's insights shed light on this shift, offering valuable perspectives on the evolving landscape of watch availability. In a recent statement from Watches of Switzerland Group, which issued a profit warning to shareholders, led to a 30% decline in its share price upon release. The group revised its projections downward for the current financial year, citing the oversupply of steel sports models from Rolex as a significant contributing factor to its struggles. This shift is particularly notable considering the high demand for these models in recent years. Additionally, Watches of Switzerland attributed its challenges to weak underlying demand in the UK market, which heavily relies on promotions, signaling a broader slowdown in the mid-market luxury segment. However, Rolex's contribution to Watches of Switzerland's overall sales, accounting for 55 to 60%, underscores the profound impact of market dynamics on the industry's major players. Amid the ongoing economic uncertainty in the watch market, prominent brands are opting to increase their prices. For instance, Rolex recently implemented a widespread price hike ranging from 3 to 6% in just the past few weeks. Meanwhile, other brands are executing price increases more subtly. Take Omega for example, which introduced a new iteration of the Speedmaster Apollo 8 with minor design tweaks, such as a 3D representation of a Saturn V rocket on the subdial hand. Despite minimal changes, the new model commands a staggering 40% increase in price compared to its predecessor. Similarly, IWC unveiled the new Ingenieur last year, a handsome steel sports watch with a hefty £12,000 price tag, prompting skepticism among consumers regarding its value proposition. This pricing strategy seems counterintuitive, defying the economic principle of supply and demand, which typically dictates that prices decrease to stimulate demand during periods of low market demand. Instead, continuous price hikes may force retailers to offer deeper discounts to move inventory, eroding their profit margins. There's no question that Rolex has encountered some unexpected challenges in their high-end sales within the UK market over recent months, influenced by various global crises. There has been a decrease of approximately 20% in the market over the past few years. Looking ahead, optimism may be tempered by the cyclical nature of market trends. The surge in watch interest and industry growth witnessed during the COVID-19 pandemic might either continue or wane as financial conditions improve. Additionally, the speculative investment mindset that fueled the watch market bubble may dissipate, leading to a divergence between brand pricing and consumer willingness to pay. As uncertainties persist, the question remains, where does the future of the watch market lie? To sum it up, it is difficult to definitively say whether the Rolex bubble has burst, as a multitude of factors influence market dynamics and can evolve. However, the latest trend suggests a cooling in the fervor surrounding Rolex watches, particularly in the secondary market. Instances of price drops and increased availability of certain models indicate a shift in demand and supply dynamics. Additionally, reports of Rolex implementing price increases amidst economic uncertainty raise questions about the sustainability of the brand's premium pricing strategy. While these indicators suggest a potential slowdown in the Rolex market, it's important to note that luxury watch markets are complex and can exhibit resilience and adaptability. Therefore, while the Rolex market may be experiencing adjustments, whether it constitutes a definitive bursting of the bubble remains open to interpretation and ongoing observation. As we conclude our exploration of the current state of the watch market and the dynamics surrounding Rolex, the landscape is undergoing significant shifts. From fluctuating prices to changing consumer behaviors, the market is in a state of flux. Whether this signifies the bursting of the Rolex bubble or merely a recalibration of the industry remains to be seen. However, what is certain is that continued observation and analysis will be key to understanding the trajectory of the luxury watch market. What are your thoughts on the topic we shared in this video? We'd like to see your answers and opinions in the comment section. And that concludes our video. Thank you for joining us here at Ventichic. Remember to leave a like and comment on this video. Make sure to subscribe to our channel to stay updated on future releases. We'll see you in the next video.